All right. Well, let's start. Thank you very much for joining another edition of Into the Blogs webinar series, where we try to discuss some of the hottest topics in analytics related to the crypto space. Today is we're gonna go really deep as we're covering a very complex topics related to price predictions in crypto assets. Before that, as always, I would like to wish that everyone is safe in the middle of this uncertain times, even though many economies are returning back to normality, still feels a little bit awkward. So I hope that you're all staying safe. So today, this is one of my favorite webinars because we're gonna go very deep into the machine learning, deep learning aspects. We're gonna cover a lot of the things that we have learned trying to create predictive models for crypto assets. So the agenda is very simple. So we're going to talk about our journey very quickly, just to establish some level of credibility here, that everything that we have done to try to figure out how to do predictions. And then we're going to forget about IntoTheBlock and talk about practical lessons about this problem, what to predict, how to predict it, how to operationalize predictions, and look at a number of lessons that we have learned. From the ones of you who don't know me, I'm Jesus Rodriguez. I'm one of the founders and the current CEO of and CTO of IntoTheBlock, computer scientist by background, have a long career as a computer scientist from shops at Microsoft to building quant systems in Wall Street. I teach Apply AI at Columbia, have had several exits as an entrepreneur, active investor, and for the last year and a half, I have the privilege to be working in these problems of at the intersection of data science and crypto. So this session is very practical. I'm going to go really fast because we have a ton of content to cover. So when we think about predictions, that's sort of the ultimate expression of crypto analytics, right? Particularly for retail investors, when they think about a price action, if we can forecast if it goes up, down, or sideways, that's ultimately what everyone wants to know. But it's obviously a very hard problem to solve, particularly in a very inefficient market like crypto. By the way, before I go too much further, because we have done so many of this, I didn't mention the logistics. If you have any questions, just use the Q&A panel, and we have people monitoring that. I will stop throughout the presentation to take questions. So we're not bringing you predictions from a theoretical standpoint. So we have been working on this problem for about 8 months now, and with a lot of failures, actually, and some successes. So I want to tell you a little bit about how, from the more machine learning standpoint, the things that we have done and what we have learned. So a few months ago, we started with this approach of trying to use deep neural networks to try to predict the price of crypto assets. Why deep neural networks? So in quant circles, there is sort of a new group of funds that are sort of gravitating towards the idea of using deep learning for creating models, right? Quant models, because they tend to uncover a lot of nonlinear relationships between assets and be more resilient and try to uncover new alpha opportunities that most models find. So we subscribe to that thesis as well as a data science shop, and we tried to build a number of deep neural networks that focus on forecasting the price of crypto assets. When we look at the research out there, even though this is very new, we decided that order books as a data source, it was the right place to start. Because there is where, even though there is not a whole lot of research in this area, you could find way more research that related to order book than derivative and certainly blockchain data. So for about 5-6 months, we try over 120 models, 4 terabytes of training data, and have very little to show for until the end of the year, in which we hit a couple of breakthroughs that translated that in 3 predictive models that today we have in production. One that is forecasting 10 basis points variation every hour on the hour, one that is forecasting 10 basis point variations every 5 minutes, forecast 60 minutes every 5 minutes, and one that looks for a higher variation of 50 basis points. This is related to order book, to trade information. And this is not theoretical approach. So we're currently working with a number of quant funds, actually building trading strategies based on this, and the first group of funds are actually going into production with the strategies that they have built. So we're applying this in the real world to generate alpha. It's not a theoretical exercise. And also we're launching predictions in IntoTheBlock. So in a few days, you're gonna have a new section into the blog that is related to price predictions, and you're going to be able to get directional forecasts hour by hour or every 5 minutes of the price of different crypto assets, and everything is going to be transparent. The accuracy, the missed predictions, and everything is going to be completely transparent to you in the platform. So we're trying to solve this problem for both institutional investors and retail investor and apply it ourselves. But as you can see, we tried many things, and only a handful of those work. So when we think about that journey, if you're serious about working on predictive models for crypto assets, the journey itself can be summarized in 3 simple steps. The first thing is trying to formulate a thesis, like what are you trying to predict? The second part is how are you trying to predict it? Like what methodology, what techniques, what methods? And then the final thing is how do you take those type of predictions and make it production ready so they can be useful by traders or by your own group? But how can you run that systematically in production at a scale, which is not which is a difficult problem in and of itself. So let's start with the first part. So how do you develop a prediction thesis? What do you predict? There are many things that could be predictable. So you can predict price. That is what that's the intuitive sort of the first thing that people think about. But you can also predict direction, right? Is the price going to go up or down? Is a bullish movement, a bearish movement? You can predict risk or volatility to try to offset some positions. Also, there are predictive models that focus instead of a single asset in a multi-asset based on factors of value, momentum, things like that. And like that, there are many other, well, not many, but there are a few other things that could be predictable with this type of approach. The second thing that we need to select is what data source are we going to use? So are you going to focus on making predictions based on blockchain data, derivative information, order books, other things, alternative data sets, other market data related to gold, equities, and other things? So the way we think about this, the 3 biggest sources of information in the market is certainly blockchain data sets, derivative are becoming very prominent, and a spot exchange order books. The way we think about this is, and this is sort of important, if you're looking for predictions in a medium to high frequency, certainly order books offer the biggest possibility because there are a ton of movement there. Derivatives is getting there, but it's still, the volumes are still low, or although increasing. And certainly blockchain predictions based on blockchain signals take longer. So the frequency is not very high. If you're looking for systematic alpha opportunities that have medium frequency, but that can uncover new alphas and inefficiency very frequently, derivatives is certainly your best bet. Order books follow, and blockchains is last one. But then if you're looking for very unique alpha opportunities, something that is very specific to crypto, one event, the Bitcoin halving, a transfer to an exchange, Ethereum transfer last week, then blockchain data sets offer the best bet. Derivative second, and order book tend to be the most efficient. And a portfolio of predictions is a combination of all of them, right? There is no only one way that works, but this is a methodology that we find useful when we think about this problem. The second thing, and most important, arguably, once you decide what are you going to predict, is how to predict it. In traditional quant circles, there are three methodologies, 3 type of a school of thoughts to approach this problem. The simplest one is time series forecasting methods. We're going to talk about that. Then there is a more traditional machine learning with decision trees and linear regression. And then there is a new school of deep neural networks and deep learning that is what we're focusing on, even though we try everything, right? So for different problems, we apply different techniques. We just think that there is a bigger body of opportunity here. So in the case of, we try applying to crypto assets, we try a large number of traditional time forecasting methods such as ARIMA, DeepAR, Prophet. They're super easy to implement. The things that we found is they have very poor resiliency to crypto market fluctuations. So crypto markets tend to be very inefficient. All sorts of crazy stuff happen, and these models are not very very efficient. And then most of them have a very small number of things that you can use as a predictor. On the 12 to 13, if you're trying to, some of our models are making predictions with 120 factors. So this is definitely not an option. And then you need to know the predictors ahead of time, right? So you need to know, I'm going to predict price with this thing, which is not always the most normal thing to do. Then when you look at traditional machine learning models, such as linear regressions of decision trees, certainly there is a huge body of research and content in this area. Well, in our experience, this type of models also show to be not very resilient in crypto markets. If you think like events like the crash, the March crash, the March 11 crash, so this type of models do not perform very well. It's really hard to generalize knowledge with this type of thing. It's really hard to, with a single data set, achieve a model that can build generic knowledge that could be applied to other cryptos and things like that. And they're very prone to overfitting. So they're very prone to optimize for the training data set that we're using. Again, this has been our experience applying this. Some people might differ. But there is also not a whole lot of research when it comes to specific applied to crypto. In the case of deep neural networks, they're very expensive to execute. So you need to invest quite a bit. And they're very hard to interpret because they're so complex that sometimes I have this discussion every day, right, with our team. Like when we see the models making a decision, is how did they arrive to that conclusion? And many times we just don't know. And but it does have, these models do have very, very tangible benefits that can formulate very sophisticated theses in complex organisms like markets and go very deep to try to find nonlinear relationships between variables. And this is one of the things that we like. So I would like to take that thesis just a little bit deeper and give you a perspective of what's happening in the deep learning markets, more from a research and technology standpoint. So you get an idea why we like this approach. So let me try to make it the case for deep learning models for predictive strategies. So the number one thing, if you talk to any quant researchers that are looking at this, they will tell you the number one case for deep learning models is how deep they can go to find relationships between many variables. And predictive markets are very complex entities. So it's not predicting price with one factor or with two factors. Typically, it's a large combination of things that only work for a certain period of time, and then those combinations change. There is also a large body of research. There is more research being produced in deep learning these days than in any other area of artificial intelligence. And one thing that it still is very early, but one thing that we're very surprised is how resilient these models are once you keep retraining them to market conditions. Again, this is something very new, so there is not a whole lot of experience, not even in big capital markets. So it's relatively new. So the near-term future of predictive models in capital markets in general is going to be based on deep learning. So because just there is more research, every major quant fund, 2 Sigma, DRW, CETA, all these guys are venturing into this area. So the near-term future is just looking like it's going to be the next 4 or 5 years are going to be very, very heavy driven by the evolution of deep learning technologies. So let me try to illustrate that in a few examples very quickly to give you a perspective of what I really mean. So let's take a challenge that is very common. You're trying to make a prediction and you try to decide which attributes are predictors, right? This is what is called feature extraction in machine learning in general. So you need to decide what attributes you're going to use to predict something, price, risk, volatility, and so on and so forth. The traditional approach is, okay, you come up with those computations, right? You're an expert, you figure out what are predictors, and that works, and we do that a lot. But there is a different approach. So for instance, an example is, can I predict price by just using order book bid and ask? Is that a good predictor, right? Among many predictors, does that show some level of potential influence in price? There is a different approach in deep learning school called convolutional neural networks. That is this type of neural network that imagine that you fit the entire order book and then just come up with any computation that you might think is relevant. And the thing, this type of neural networks apply a mathematical computation called convolutions that essentially can establish computations in very high dimensions and reduce it to very small dimensions. So we tried some experiments with this, and some of these networks came up with 300,000 factors that could be predictors of price, which is something a human cannot comprehend. So this is an area that there is a lot of research and a lot in capital markets that we're excited about. Let me give you another challenge. How do you know which model to use? So we're going to predict Bitcoin prices based on trade information. How do you know which, is that a decision tree? Is that a recurrent neural network? Is that a convolutional? So very often we rely on the subjective opinions of data scientists. So my head of data science is a big fan of recurrent neural networks. So he might try to approach that problem as a recurrent neural network problem. So there is a different technique called neural architecture search, or the popular term for this is called AutoML, that is trying to make model selection a machine learning problem. So imagine a machine learning model that I tell them, I'm trying to predict price, I'm trying to predict price with this. Tell me what works. And what these models work is they try hundreds and hundreds of different models and narrow it down to a subset that then you need to take and optimize. You still need to do a ton of work, but then it's giving you a more empirical model selection versus being completely subjective. We're super excited about this. We tried many ideas in this area, and I don't think any of them work, but we keep looking at it because we think it's a very prominent area of research. So another challenge, in the crypto space, there is a ton of problems with data accuracy. There are fake volumes, unwashed trading, not very reliant APIs. So many of the data providers out there are regularly having outages. The exchanges APIs, that they have gaps in time. We're super, I mean, we partner with Crypto Compare very closely on this, and we think they're one of the best. But you find a lot of these problems narrowed down to the exchange APIs, and you still have to deal with a lot of issues. So how can, if the model starts missing data, starts making a stupid predictions, and sometimes you need to make predictions or train a model in circumstances in which there is not a whole lot of data. So an area that we're very excited about is this thing called semi-supervised learning. That is the idea that I could train a model in the absence of some data set. So to give you an example, suppose that I'm trying to train a model for blockchain, predicting price based on inflows and outflows on blockchain exchange addresses in the blockchain. There is a very small number of those addresses. We actually created a classifier for solving this problem, so we have a bigger data set now. But one thing that you can do is create one of these semi-supervised learning models, have it learn from the small data set that exists, and tell them, go generate new sample data sets that look just like this so I can train my models. And that's a very emergent area of research that is gaining a lot of popularity because getting labeled data is hard, and it's something that we track very closely. So another challenge, knowledge reusability. You created a predictive model that is really good at predicting the Ethereum price based on order books. Can you actually reuse that knowledge with predicting the price of Ethereum with order books? And something else. So once a model learns what works, can you reuse part of those skills, which is how we humans learn, right? Like, it's not every time that we need to master a subject, we don't start from scratch. We're constantly drawing analogies or borrowing concepts from other skills we have. But in the case of machine learning, you almost start from zero. So there is an area of deep learning called transfer learning that does this precisely. That essentially you train a model, the model acquires some skill, master one skill, and then you use a subset of that skill to master a new skill. And this reduces the training time, the computation times, a lot and makes them more efficient. So if you follow this area, some of the most important breakthroughs in deep learning in the last 2-3 years are coming from this area. So models like the OpenAI GPT-3, Microsoft Turing NLG, Turing BERT, these massive language models that are generating fake news and all that, they're all based on this. They're trained on massive amounts of textual data from Wikipedia and all that, and they can generalize the knowledge to do other things. And so this is an area that we keep close tabs on it. So the final challenge I want to present to you is training coverage. So imagine the crash of March 11th. The Bitcoin price dropped a significant percentage in an hour or two. So that's an event that is not very common. And it's hard to replicate. So you train a model with historical data. How do you train it for those scenarios? Unless you're very consciously looking for those type of things. So one area that is very common to try to simulate scenarios that are not in the training data, but simulate not on purpose, not that you're trying to simulate a 12% crash in an hour, but just create all sorts of simulations that eventually will convert into scenarios like that. So this area is called generative models. And essentially here you can create new data sets based on previous train. You train a model on a subset and ask them to generate more different variations of those models. And many of that data can be used to train new models. So an area that is very popular in this space is what is called generative adversarial neural networks, in which you have two neural networks compete with each other to try to maximize the knowledge. So hedge funds like Numerai, they claim that they use GANs, generative adversarial networks, to try to encrypt the data that they provide to traders. Right, so one model tries to encrypt, the other one to decrypt, decrypt until you arrive into something that is bulletproof. And these type of techniques are used to protect neural networks and all that, but the area that we're really interested on is data set generations, right? Can I generate stuff that is really, that could simulate all sorts of scenarios and make my models more resilient, even if they're using fake data, but this fake data generated based on real data. So once you have a model, the third part is operationalize, is how do you take it to production? How do you make it ready? And this is an area that we learn a lot. I mean, this is hard. There is a lot of things that you typically don't plan for it. So I would like to discuss 10 lessons that we learned very quickly, that we learned what bringing these models to production. So if you're thinking about doing machine learning, deep learning for this might resonate with you because there is no documentation about this type of thing. So it's fairly complex. So one thing that we discovered is that in crypto, the size of the training data set do matters. Like we have seen way better results with data sets trained on 6 years, massive minute by minute data, that in data sets, we try all sorts of experiments of skipping 2017 because we were scared of the bad behaviors and all that. Nonsense. The bigger, the better at this point in the market. Another lesson is that crypto data quality, I alluded to before, is a huge issue. You're going to have fake volumes, wash tradings. You're going to have APIs going down all the time, missing blocks on the blockchain. It's just hard to get high quality training data for this type of model. So you need to do a ton of work in that space. Now, something that is somewhat intuitive, but even for data scientists, somehow they're challenged with this. An accurate prediction doesn't mean an accurate trade. So I can tell you the price of Bitcoin is going to go up the next hour, and you still wouldn't know how to trade it. So making predictions actionable is the work that we're doing with a few quant funds on diving deeper into how to provide trading strategies based on that. Then another lesson, if your models need to execute real time, that's really hard. So imagine that I take a massive neural network, 50,000 parameters, it's making predictions with 120 attributes. The thing is really accurate, but it's also really big and really slow. Most technology in the market today is designed to execute machine learning in batch. So make a prediction, output the prediction. and we execute after. But if you want something that is give me a prediction now, it's really hard. So it's possible. We have done it, but you need to optimize quite a bit for the size of the model and how to serve it and the execution time. Blockchain is an area that we're super excited about. We started as a blockchain analytics company, but one thing that we've realized when it comes to predictions, blockchain predictive models are very fragile. First of all, there is not a whole lot of alpha that it can be discovered. The blockchain, there are areas that we think they're super promising, but they're fragile to all sorts of things. An exchange, suppose that a big exchange like Binance, change the way they create addresses and all time overnight. So all the analytics, and they don't need to disclose that, right? So all the analytics that you're using in that area, they go out of the window. So you're vulnerable to all sorts of things that are really not reflected in the data directly. So it's hard. I mean, there is some areas that are super interesting, but it's not a clear cut. Another lesson: retraining models is key, and it's also difficult. So we have a model that is predicting very accurately. When do you retrain it? If a retraining exercise goes wrong, then your predictions go out the window. So we have a rule that is sort of goes like this: we try to retrain our models periodically, every couple of weeks or so. We try to retrain them when there is a market event that we want to capture that knowledge, and we try to retrain them when the performance degrades. The combination of those three rules. And then we always keep multiple versions of those models in production. So if the new model starts making stupid predictions, at least we have the we have the previous one. So things like that are non-intuitive, you need to think about. So experimentation is key. So trying new ideas. We try 122 models to land the first two. So having an infrastructure that allows you to just experiment, try idea, try new model, test this, optimize, ship to production, test again. So that's super, super important. And obviously most companies doing this in the space, the infrastructure is not there. Even for class one, tier one quant funds, they're just starting to build this type of thing. A lesson that was hard for me to accept as a machine learning purist is that when it comes to crypto, better infrastructure beats better ideas and models all the time. So I'll take a mediocre machine learning prediction model running in a world-class infrastructure that I can retrain, I can optimize over a great machine learning model running with a very bad infrastructure. So because we built the infrastructure of IntoTheBlock, we have 10 terabytes of data. We put a ton of time on building this layer that you can create new machine learning models, ship it to production, take them down and things like that. We're able to experiment rapidly. And that level of infrastructure collecting data, it just pays a ton of dividends, and it's a good investment. Data sources in crypto are very unreliable. API gaps, fake data, all those things. It's hard to collect highly accurate and reliable data. A lot of the providers out there, they regularly have problems. And then if you have a gap in time on the data, then what do? And then one thing that might be obvious, but most of the research papers that you're gonna read about this space, when applied to production, they're gonna fail. As simple as that. Because researchers optimize for publications, they don't optimize for production. So a lot of things that in a paper look really good and the techniques look really comprehensive, when you apply it, particularly in crypto markets, that is highly inefficient, they're just going to go out the window and they're going to fail. So let me show you some early results, the things that you're gonna see in IntoTheBlock, the things that our customers are using today. So very quickly, so the first model that we put in production is predicting 10 basis points every hour for the next 60 minutes. So this model at the moment, as of last week, was showing close to 68% accuracy, and this matrix reflects, in a number of weeks, the number of times I made a bull prediction that was bull or made a mistake with neutral, and the same the number of times I predicted bear that was correct or incorrect. So you can see the accuracy is very high, and you can also see that it only dipped into below 50% one time. Actually happened again after recently, so 2 times. But when we took this snapshot last week, it was only 1 time. So this one it has proven to be very accurate. Then another model is trying to do the same prediction, but every 5 minutes, looking for trends. And this is one that we're actually trying a few trading strategies right now on this. So we're very excited about this, and it's showing very high levels. So obviously predicts a lot, makes a ton of predictions, and it is close to 68%. But you can see that it makes many more predictions than the previous one, because it tries to hit it every 5 minutes, right? Forecast the next hour every 5 minutes. Those models are very similar. They use different features, but it's the deep neural network underneath is the same type of architecture. And you can see here the availability and the frequency compared to the previous one. So you can see that this one is obviously way higher. Then there is another model that was proposed by one of our partners that is looking for higher variations, so 50 basis points. Obviously, there are no 50 basis points variations every hour. So actually, when this was mentioned to us, I pushed back intuitively. I said, like, it's just going to predict a lot of neutral, which was true. It did predict a lot of neutral, but it was also very accurate on predicting bull and bear. So the way we're thinking about this model is going to be used as a reinforcement to the other ones, right? You can get a bull prediction for 10 basis points, and then a bull prediction for 50 basis points. So your strategy should be different. Maybe you will allocate more capital or things like that. And these are the same type of charts in terms of the accuracy and availability of that model. And then we're working on a ton of ideas. So we have a body of research on this that is huge. Many of those 120 ideas that we tried, we think they were good, and we just didn't know what the heck we were doing. We're trying a few models with order books predictions for trying to get medium to high frequency on the 5-10 minutes to an hour time frame. We have a couple of models that we're testing with futures. We have some thesis there of what could work, and we have built a ton of IP in terms of exchange flows and things like that, tracking money in and out or sitting in inventories of exchanges. So we think for a longer time prediction of 8 to 12 hours, that's interesting. So we're trying. You're gonna see more and more and more. So go subscribe to the blog today. You're gonna see we're shipping 5 in the next few days, but you're gonna see a ton of this coming down the pipe in the next quarter. So a quick summary, and I want to tell you about the next webinar. So crypto assets are predictable. They're predictable for certain periods of time, certain market conditions, but they are predictable. So if you're working on this, first formulated thesis, select a methodology, and then figure out how to operationalize it. From everything in the market, the most innovative research is coming in the deep learning space. Sign up for ITV. You're gonna see predictions in the next few days. Actually, you're gonna start receiving predictions in an email every day now. Like it's been like that for the last 2 weeks prior to our launch. There are a couple of questions that I want to answer. Before that, I would like to tell you about the next webinar. We're gonna talk about exchange liquidity. So there is a lot of noise in the market with this, rankings going around and all that. We don't have a solution, but we have a ton of ideas of what could work in general, like for a specific tiny problems. How do you combine many tiny problems towards a bigger solution using machine learning? So we just want to have an open discussion about this and show you some data about how to tackle exchange liquidity, fake volume problems, and things like that. I think the URL for the webinar is in the chat, or should be in a minute. And now I would like to open for questions. If you want to reach me directly, shoot me an email to jr@intotheblog.io. You can contact me through Medium. I tend to be very active in Medium, so I respond very quickly. So there are a couple of questions. Fernando is asking how actionable are the current predictions? They are, like I said, so the ones that we try are from those 120, right? Those 3. That's the one that several funds are building a strategy based on that. You need to build a strategy, right? So the fact that I tell you it's going to go up, with that you cannot do much. You can reinforce a thesis. You have to have a strategy. There is a question about Adam. Well, this is a long question. What's the difference? So I guess the question is, what type of blockchains or DLTs, and what are the different theories that we, or I guess the different approaches that we use for different blockchains. So the question is a little bit large, so I'll try to address parts of it. So in terms of, we found some predictive models that are able to generalize well from one asset to another. When it comes to blockchain, specifically, it depends of the strategy of the data source that we're using. If we're using something generic, like let's say exchange flows, that's a concept that is homogeneous, right, across all blockchains. If we're using very specific factors like UTXOs and things like that, that only works for UTXOs blockchains. So in general, we found that account-based blockchains, UTXO-based blockchains behave very different from the other, but then there are predictive models that could focus in aspects that are common, right? Like exchange flows being a classic one of those. Our Artem is asking, do you use raw blockchain data? How do you encode it? Yeah, so we have an entire layer that is receiving the blocks. We extract the transactions, validate the accuracy. That's even for IntoTheBlock, the data that you see there today is all the blockchain analytics comes from the same infrastructure, and we have good partners that help in that area as well. What is the exchange broker that we use data to predict? None. We connect directly to exchanges in many cases. Artem asked another interesting question, shorter this time. He asked, could you use reinforcement learning approach to train a trader? So reinforcement learning is this topic that became very famous in deep learning because it was a technique used by AlphaGo to beat Lee Sedol, the Go world champion. And DeepMind obviously has been pushing the reinforcement learning agenda, as consequently there is a lot of people that have worked on research ideas of how to apply it to trading. We looked at this or are looking into this in a different area. So we think that for essentially reinforcement learning is a model that learns by trial and error. Make a trade fail, make a trade work, and it builds knowledge. This thing learned to play Go, right? AlphaGo, by just playing, right? Instead of trying to train on previous games. The fact of the matter is that the most applications of reinforcement learning today are in games. Like if you go to any major deep learning conference and you talk to researchers, or the use cases are games. For the most part. In trading, there are some very interesting applications. Obviously, people think about predictions. So can I just master the knowledge of the best traders? That seems conceptually possible. To me, it's a little bit futuristic. The one that I'm particularly interested in that is a little bit more pragmatic is once you have a prediction, can you make it actionable using a reinforcement learning strategy? So if you separate prediction and action, predictions use this heavy deep learning, all sorts of metrics. The actionable part of finding an entry point, exit point, most of that is just statistics. So there are people in the market, including us, that are playing with machine learning models to do that too, right? Can you make the actionable part intelligent? And I think reinforcement learning there is an area there that could be very applicable. So I take an entry point and it failed, right? And it was wrong. I took the stop loss didn't work, and I keep optimizing, and become smarter over time. That idea we're super intrigued by it, and actually we're testing in the next quarter. So just sign up for IntoTheBlock and send us a note. Next quarter we're testing some ideas like that. Can you, Christian? Can you add? Let me move this here so it doesn't look like I'm looking at a different monitor. Can you add in future crypto for predictions? Yeah, so there is another crypto for prediction. We're launching Bitcoin and Ethereum first. So one thing that you should never believe is when you see a predictive model that people tell you works for everything. Every crypto is different and requires time of training and all that. So this takes time. So we're launching, I think, 3 predictive models for Bitcoin and 2 for Ethereum, and then we're launching Bitcoin Cash and Litecoin. It takes a few weeks to adapt and optimize even the same model for each one of these cryptos. So if somebody tells you I'm predicting 100 cryptos, just run as far away from those people as you can. Which is the most trustable data source for IntoTheBlock right now? In terms of prediction, I'm assuming you need to take the answer with a grain of salt, because we try many things and failed, but some of those failures were us and not really the data. So we did run into all sorts of data issues. The rule that we created is that we only, in the case of order books, that is what we're using now, we only use exchanges that we trust and that haven't had any issues. So the ones that we're using today is Binance, Bitstamp, and Coinbase for training the most. And then because different fonts use different things to trade, so if you're trading in BitMEX, we create a version of BitMEX for a version of the model trained on BitMEX. This is what we decided to do. I'm not making any statement that this one is better than the other. What I can tell you for a fact is that there were exchanges that have huge volumes, and when we trained those models, they couldn't make a single prediction. The performance dropped from 70% to 30%. Right, in a few minutes, because there is a lot of fake data there that doesn't correlate with markets. So we need to train on exchanges that we trust. So an anonymous comment about the Sharpe hit ratio. Just send me a note and I will share those. No, I don't have it in front of me for the strategies, right? Because I was trying to focus on the prediction part. So another anonymous, will IntoTheBlock offer a way for automate trades to be placed on exchange-based predictions? Not at the moment. We don't have plans. We're actually not executing any trades. We're working with funds that are the ones building the strategies and executing trades. Our team say thank you for the questions. And Christian asks, could we add Ethereum? Yes, we are in Ethereum in the first day of the launch. So sign up for ITV. You're gonna get Ethereum predictions in a few days. Another question, Sebastian. When can we get price predictions IntoTheBlock? Next few weeks, aiming for the end of the quarter. So we're live, right? So you can see some of we're publishing some in Twitter. The API, the entire backend is live. We're building the user experience and testing. So that's we're days away. The goal is before the end of the quarter. We might miss it, but we're certainly trying really hard. But sign up for the platform and give us a ton of feedback. This is a hard problem to solve, so we're trying really hard. There are a couple of other questions. So do we use, Jose Neto is asking, do you use deep learning, I assume, for portfolio optimization? Not at the moment. So we do portfolio optimization in the sense of hedging and balancing and risk and all that, no. Because we're not managing portfolios. We do use intelligence for once you're acting on a strategy, deciding how much to allocate and all that. Given an accurate model is most successful when it's used by a minority of population, why advertise such algorithm? That's Ortam. Thank you for the question. For a number of reasons. One, these models are gonna fail. So take it to the bank, right? They're doing 70% today. Tomorrow, they might fail. So our goal is to build many that as a whole, right? So you can have a good source of intelligence, but we're not thinking that one model or two architectures are gonna. We don't think that any model can figure out the market by itself. So the question is, as I said, predictions are not tradable. So I can tell you Bitcoin is going to go up in the next hour all day long, and it's still hard to figure out how to trade it in and out and how to make money with it. We are, with respect exclusivity with our partners on the Quant Fund. So every strategy that our partners build is exclusive to them. And we don't share or advertise or disclose any details about the strategies itself. The predictions are common. So if you have a clever strategy to build with our predictions, feel free, give us a call. I mean, we're super interested, and we don't share that with anybody. So the actionable part is exclusive to whoever built it. The predictions are common. So if you figure out how to trade but by just directional, I mean that's great. We don't think it's that simple. Okay, guys, I think that's all. Thank you very much for joining. Sign up for ITV. Give us feedback about predictions. This has been a long journey. Sign up for the next webinar and complain all you want about our predictions and give us feedback. This is super important to try to get it right. So all feedback is good feedback at this point. Thank you very much. I hope to see you in 3 weeks.